Okay, so let's move on to the specific commodities. You've been very generous with your time, and there are a bunch I want to ask you about. Precious metals, gold in particular, gold and silver. Outlook in this context, positive. What do you think?
Well,
Negative?
I'm a gold bug, first of all, so let's give the disclaimer. I am one of those who believes that the current economic recovery and the current bull market is driven more by liquidity than solvency. Perhaps I'm an ethnocentric American, but I think that while many factors drive the gold price, the most important factor is the accession of the US dollar as the world's most important savings and transactional instrument. The US 10-year Treasury is acknowledged as the bell market security worldwide, the one which all others are based on. And the US 10-year Treasury has been in a bull market since 1982. The yield peaked, which is to say the bond was at its bottom in late 1981, 1982, at, if my memory serves me correct, 15.5 or 15.6 yield. The bond rose, meaning that the yield fell over 35 years to a low of, if my memory serves me correct, 1.76. It's now back up, if you can use the phrase, to
Right.
3. I would argue
And that
that
has people panicking.
pardon me?
And that has people panicking.
Yes. I would suggest to you that the graphic, were you to chart it, would suggest that the 35-year bull market in the US dollar, as expressed by the US 10-year Treasury, is either over or much closer to the end than to the beginning. If you believe, as I do, that the most important determinant of the gold price is faith in the ongoing purchasing power of the US dollar, that would suggest that a bull market in gold is much closer to the beginning than it is to the end. That's partly narrative. Now let's look at arithmetic. In other words, let's talk about why that might be true, other than the passage of time.
Okay.
$21 trillion. Your viewers should write that down. That's 21 followed by 12 zeros. It's a hell of a lot of zeros. And that's on balance sheet liabilities. The Congressional Budget Office, not an old fat anarcho-capitalist crank like myself, suggests that the off-balance sheet liabilities of the United States government, that by the way is 65-year-olds like me, Medicaid or whatever they have me on, Social Security, $120 trillion. That's 120 followed by 12 zeros. Congressional Budget Office suggests that the unfunded pension liabilities, which aren't part of that stated deficit, are another $5 or $6 trillion. And then you add the states and the cities.
Right.
It seems to me that one of the things that we need to consider as investors and also as a people is how do we deal with these debts? Make no mistake, there's cash in the system now, but my beginning statement is that solvency sometimes is a mask, or pardon me, liquidity is sometimes a mask for solvency. And I would suggest that we are at or verging on insolvency. So how do we deal with this? Do we, as Doug Casey would suggest, have an honest default, where we say to old folks like me, too bad, so sad, we made a promise, but we're not going to keep it? Or do we default the way that we did in the 1970s and depreciate away the purchasing value of the dollar, and by so doing, inflate away the net present value of those obligations? If passed as prologue, I would suspect that the latter is much more politically palatable than the former, which would, of course, be very, very good for the gold price. One must remember another Rick slogan, that which is inevitable does not have to be imminent. So
right.
while the arithmetic is troubling to me, it would appear that I'm one of the few people in the world for whom it does seem to present a current challenge.
So near-term fluctuations possible. You'd see those as a buying opportunity, or maybe an opportunity for your credit analyst to make business.
Now, it's important that we segregate the gold price with gold equities. While
Yes.
gold equities certainly are impacted by the gold price, I think they're very different asset classes. I own gold personally because I'm afraid. I own it as a form of insurance policy, if you will, very, very, very good liquidity. I own gold stocks for other reasons. I believe, rightly or wrongly, in some companies' inherent competitive advantage over other companies. There was a point in time in the 90s when optionality was a big part of the gold stocks because you got optionality for free. It would seem now that optionality is viewed by many participants as the only reason to be involved in the gold equities markets. And I would suspect that those people should reacquaint themselves with securities analysis and look at these companies in terms of their ability to generate free cash. Yes, yes, yes. Wonderful cure for insomnia.
Well, actually, I find Graham rather amusing. But anyway, okay, excellent points. We've got a lot to cover, so let's move on. Industrial metals, is Dr. Copper telling us anything right now or telling you anything right now?
Dr. Copper, sadly, is a lousy lecturer.
Okay.
I believe in simple declarative statements where I can get them, and Dr. Copper is giving me a very mixed outlook. On the one hand, the incentive price to bring new copper into production, we've looked at this very carefully, is at or above $3.50 US cents. And we are certainly living as a society on copper deposits that are extremely, extremely long of tooth. So we are facing a real supply deficit looking in the not too distant future, 2, 3, 4 years. The problem with that forecast is that it suggests that demand stays the same, that the economic recovery that we all have been enjoying in the last 9 years doesn't come a cropper. You don't need to replace supplies if nobody is buying them. So while I wish I could give you the simple declarative statement with regards to what Dr. Copper is saying, Dr. Copper is proving, as I said before, to be a lousy lecturer. I am, of course, speculating and investing on certain copper companies, that notwithstanding.
Okay. So that touches on sort of the new narrative in this space, and that is the new energy minerals and the electrification of cars and planes, and the world is shifting its energy paradigm here. Do you buy that narrative? Are you skeptical about that? I mean, copper, people talk about lithium and cobalt and all that stuff, but all those gadgets take copper wires, and so that's part of that story too. What's your take on the new energy paradigm?
Well, I think it's true, the new energy paradigm, and I think in certain circumstances it's overpriced. My experience has been if there are 50% operational margins in any commodity, the commodity is 3 or 4 or 5 years away from getting waxed. The poster boy, of course, for the, quote, energy metals has been lithium, and I've been spectacularly wrong with regards to lithium. Demand for lithium increased very, very, very fast. Make no mistake, there is nothing resembling a shortage of lithium. Now, there
right
are
after hydrogen. It's on the periodic table.
250 companies looking for lithium who have shortages themselves, which is to say that they don't produce any. And they would suggest that there's a lithium shortage. The 4 biggest lithium producers in the world report in their annual reports that their reserves and resources, depending on the company, are good for something between 70 and 120 years at current rates of production. So I would argue with you that we have a shortage of lithium processing facilities, not a shortage of lithium as a resource. And I think recent price action in lithium would suggest that more people are beginning to see it my way. A more interesting minor metal probably in the energy matrix would be cobalt, which has done very well.
Right.
In the case of cobalt, the conundrum that you have is that you could really increase cobalt production and lower costs with a focus on just 2 countries, Russia and Congo, which nobody seems to want to do.
Right.
What everybody wants is politically correct cobalt. They want Canadian cobalt. Now, there's a town in Canada, of course, called Cobalt, which has a lot of silver. Um, my point is that I am attracted to the cobalt market, particularly now that the bloom is off that rose. But one who wants to participate in cobalt is almost certainly going to have to do it in either Russia, which scares people, or Congo, which terrifies people. My suspicion is that the big beneficiary of electrification, of distributed power, will be nickel and copper. It's worth noting that the lithium battery by weight is, if my memory serves me correctly, 86% nickel and copper. One might more reasonably call it a lithium-coated battery.
Yeah, Elon Musk himself has said, I think, that they should be called nickel manganese graphite batteries in
Right.
this case. Very interesting. Okay, so what you're saying there is, yes, the narrative of the new energy paradigm is real, but one has to be quite selective about the specific metals and even more so of the companies that you're going to speculate on. Is that a fair summary?
Absolutely. And you did it so much more quickly than I was able to. Congratulations.
All right, so let's move on to another sort of related to this pair or grouping, and that would be the platinum group metals. If we believe the new energy story, and you have, rightly or wrongly, we know it's not all market forces. You have huge government incentives intervening here, and maybe that shouldn't be the case. As a free market advocate, I would say it should not be the case, but it is. It is what it is. And so you have, what was it, like 45% of the auto sales in Norway last year were all electric, and it was like 60% if you include plug-in hybrids. So, a major shift in the auto sector. And we both know that that's the major consumer of the platinum and palladium, which are precious, but also really driven, and price-wise at least, by their industrial demand as auto catalysts. So what's your outlook for the platinum group metals?
Big topic. My belief is that electric vehicles will continue to increase their market share from, what is it now, 1.5?
Something like that.
To maybe some number as big as 5. When we look at a country like Norway, we have to look at a country that can afford the subsidies that are necessary to keep electric vehicles on the road at their current production numbers. And we have to juxtapose that against auto sales in places like China and India. It's really a war at present between the $80,000 Tesla and the $13,000 Toyota Hilux. And in most of the world, where the bottom of the demographic pyramid is simply looking for a mode of transportation, not a politically correct mode of transportation, I think that you'll find that for the next 20 or 30 years, that the internal combustion engine and all of the components associated with the internal combustion engine face a decent future. Now, when you say platinum and palladium, we have to have two different discussions. Palladium demand traditionally has been strong because it was cheaper than platinum, and for low temperature applications could be more efficacious as a consequence of economics. That's changed.
Right.
The platinum application was primarily diesel engines, and that's been constrained by two things. The first was, of course, the Volkswagen scandal, which reduced demand for diesel engines on a global basis. And secondly, the fact that the Chinese are now 9 years into a 5-year process to increase the refining standards for diesel in China by lowering the sulfur content. The way that current Chinese diesel is formulated with high sulfur, when combustion takes place and the sulfur precipitates into the waste stream, it forms dilute sulfuric acid, which, if you will, eats out a catalytic converter. And the consequence of that is that the catalytic converter does no good in those applications. Were the Chinese to improve the standards that they have talked about to Western standards, the demand for platinum in catalytic converters in China alone would change the dynamics of the platinum market.
Hmm.
Looking a little further forward, which unfortunately I appear to be too wont to do, it's important to note that almost 60% of the world's supplies of platinum are uneconomic at current platinum prices. I'm talking about the deep, labor-intensive South African production, which is really kept alive by cannibalizing capital from capital markets and the South African government. The truth is that workers' wages need to increase in South Africa, but they can't because the industry is losing money. Sustaining capital investments need to take place, but the industry can't because they're losing money. If you had a circumstance where the deep shafts on the Platte Reef began to shut down, you'd see a very, very different relationship between supply and demand. Will that happen? Can the South African government afford for it to happen? Can the South African government do anything to avoid it?
Right.
Those are all interesting questions. A series of questions where the near-term answer is unknowable, unfortunately.
Right. Well, that's very interesting. That's okay. Let's move to the next related topic, oil outlook. We have a really excellent performance and fairly steady, stable rise all year long in WTI, Brent over the last year. But it always, I can't bend my mind around or ignore the fact that we have voluntary production cuts on the part of the Saudis, the Russians, others. So to some degree, this strikes me as artificial, like diamonds, right? What is your outlook? Are these prices sustainable? Are we going off to $100 plus again, as some people project? Or, if push comes to shove and political conundrums with the Saudis right now, or people getting, on this feeling the squeeze in Russia, do we see these voluntary restraints being repealed and therefore production going back up again? What's your outlook?
I think the voluntary restraints have had much less to do with the price than involuntary restraints. If you look at the Saudi forbearance and you juxtapose it to the involuntary forbearance, particularly from Mexico and Venezuela, that came about from their voluntarily decapitalizing their oil business to subsidize politically expedient domestic spending programs, you'll find that the great increases in production happened involuntarily and not voluntarily, and were a consequence of idiotic politics and deferred sustaining capital investments.
Actually, let me jump in that second, right, just a second, because
Yes,
a lot of people talk about Iran and Venezuela, of course, right, as the involuntary ones. But you're adding Mexico. I think that's really interesting. And the specific question I want to ask you, because I know you know a lot more about this than I do, is Venezuela is a basket case. That's not coming back, for a generation. They've destroyed their industry, and the political will is not there to do anything about that. But Mexico is a bit savvier. Can Pemex turn things around, or is that impossible also? I mean, they're even inviting foreign companies now to bid on blocks onshore, which is previously unheard of. So Venezuela is one thing. Is Mexico as hopeless in your mind, or is there hope there?
I'm laughing, Lobo, because you damned the Mexicans by faint praise. You compared them with the Venezuelans.
Sorry to my brothers in Mexico, but it's a fair question.
Is, that you sort of compared a moron to a subhuman in terms of the political response. The Pemex has been corrupt, technically competent, but defunded for a very, very, very long time. At the same time, there is an abundance of high-quality human talent in Mexico. I'm not trying to say that Mexico couldn't turn it around, but a very large field like Campeche, when you deprive it of pressure maintenance and sustaining capital investments over a very long period of time, you constrain the ability of the asset to perform for at least a decade, but maybe permanently. If you take a very large water flood like Campeche, and you don't engineer the recoveries extremely well, one of the things that happens is that the injected water begins to cone in areas where the field is underproduced. And the consequence of that is that you take a very large homogeneous field and you turn it into 60 or 70 smaller, volatile fields, which is something that Mexico may have done with Campeche. I would urge any of your listeners who are interested in the macro on Mexican energy to simply go online and have a look at the Penwell maps of oil and gas dispersal in North America. There is a sea of red, which on a Penwell map is natural gas, and green, which on a Penwell map is oil, that begins at about J, Florida, and goes to Brownsville, Texas. And then there's the border, the Rio Grande River. And for the next 200 or 250 miles below the Rio Grande River, there's no green and there's no red. Now, if you believe in God, do you think what God did was end deposition at the Rio Grande? Or do you think that there has been some fault historically in the management of Mexican oil and gas reserves? I would suggest to you that there is nothing wrong with the human resources with regards to energy production in Mexico. I would suggest that the gods of deposition were extremely generous with regard to the dispersal of hydrocarbons in Mexico. I find it ironic that the Mexicans are one of the largest importers of American natural gas. This is just, this is mind-boggling to me. And these are all circumstances that could be changed by good legislation, something which I don't see on either side of the Rio Grande, and the patient and intelligent application of capital, something which Pemex isn't famous for. Could they change it? Absolutely. Would it take a decade? I'm being optimistic.
And that would assume the political will. Okay, all right, sobering response. But so back to the price of oil. Therefore, you think it, it's going to fluctuate and so on. I'm not asking you to predict where it goes tomorrow. But basically, you're saying you see supply constraints and you see sustained high or higher prices?
Dr. Oil is as bad a lecturer as Dr. Copper.
Okay.
Because price forecasts involve both supply forecasts where I'm bullish and demand forecasts where I'm less certain. To the extent that this recovery that we're in, which I think I myself have described as long of tooth, begins to sputter, then you have some problems with the oil price. It's ironic, of course, that the big thinkers of the world, when the oil price was at $35 and $45, were suggesting that the terminus was 10 or 12. And those big thinkers at 70, now that the price of oil doesn't have to go up, are uniform in saying that it's going to go to 100.
Yeah.
I'm not suggesting that I'm any more accurate than them. I'm amused that people seem to always extrapolate trends in motion to illogical conclusions. The price of oil from $70 probably doesn't have to go up, importantly, in this interest rate environment. The swing producer in oil and gas has been the United States. And it's interesting that if you take the United States oil and gas industry as a whole in this recovery where it's doubled production, that the domestic industry has generated no free cash.
And that's at a time of low cost of capital. So if that changes...
Correct. That's the point. This has been an interest rate and cost of capital driven rally as much as it's been a technologically driven rally. If you were to increase, as an example, the prime interest rate by 30 or 40%, something that 30% is something that you've seen in the 10-year Treasury, I think we would have had a very different outcome. That isn't to say that the convergence of technologies that we're enjoying in this country as a consequence of the enormous investment that we've made can't continue to drive production and development costs lower. It's just to point out that while we give technology and legislation and property rights all of the credit for the doubling of U.S. production, we need to give, I would suggest, subsidized capital costs a lot of credit too, given that the fact that the industry, despite all the cash that's generated, has generated no free cash net of investment for 10 years.
There's the credit analyst hat again. Okay, so related to that, any particular sub-thoughts on natural gas? And then I'm even more interested in the outlook for LNG. That seems to be, for a more interesting area. You know, you got a high density of energy there. It can you know, do a lot for places that need that, but it's tricky, and infrastructure is expensive and so on. What's your outlook there?
Very positive on LNG. I think it's good for the world. The truth is, Lobo, we forget this. There's what, 7.5 billion of us on the planet, and 2 billion of us at the bottom of the demographic pyramid want to live like you and I do. And our lives are energy intensive. So in order for the ascendancy of man to continue, will we need more oil? Yep. More gas? Yep. More solar? Yep. More wind? Yep. More coal? Yep. All of these things. And natural gas and liquefied natural gas, I think, will have an important continuing role, an increasing role in the global energy matrix. LNG will also be good for the U.S. oil and gas industry. Right now, the marginal cost of dry gas in some fields in Texas is zero. You produce this as a byproduct of producing condensate and oil. You can afford to sell it fairly cheaply if your ascribed production cost is zero. This will have two great consequences. One, we will be able to export this and help subsidize our way of living in the West at the same time that we'll have reliable, high-quality fuel available to our friends around the world. If we look a little further forward, I think as speculators, the place where this could make an enormous difference is Canada. The amount of stranded gas that exists in the Western Canadian Sedimentary Basin, Alberta and British Columbia, is spectacular. And should the Canadians overcome their social and political malaise and turn this gas into cash, which seems to be something that they're willing to do, the impact that this could have on the cash flows of the smaller Canadian producers would be spectacular. Now, Canada lacks the transmission infrastructure to take advantage of this. One of the advantages that the United States has is the deepest and most robust energy infrastructure on the planet, so that we're able to take advantage of markets much more quickly than our peers anywhere else in the world. It's one of the unsung American advantages. But the willingness and the ability of the Canadians to sell Canadian gas, ironically, as an example, in Canada, Quebec and the Maritimes, where there shouldn't be a problem, but more importantly, to build the LNG facility that Shell hopes to build in Kitimat, British Columbia, to give Canadian natural gas access to Pacific Rim countries, could make an enormous difference over time to the very depressed prices of Canadian oil and gas equities.
Well, maybe now that weed's legal in Canada, they'll mellow out a bit and allow progress to go forward there. Okay, well, this has been a wide-ranging and fascinating conversation. I just go ahead and open up to you. Any last things on your mind right now that you think speculators should be paying attention to that we haven't touched on?
I do. I think we need to draw a line between investors and speculators in the first instance.
Sure.
For speculators, I think we need to re-emphasize two things. One is common sense. Speculators tend to be drawn to narratives and momentum, and narratives and momentum almost always over time generate portfolio losses. We need to pay attention to the best deposits and decent balance sheets, and we need to forget most of the flotsam and jetsam in the market. You'll remember my discussion of the fact that the exploration industry as a whole, the junior industry as a whole, is a disaster. Probably 5% of the listed entities worldwide generate the performance that adds legitimacy and even luster occasionally to a sector which has destroyed capital, some of it mine, for 40 years. The second thing that I think we need to pay attention to, getting away from narrative, is the fact that performance isn't dispersed equally. We've talked before about Pareto's law. The truth is that people who have been successful in the past tend to be successful in the future. The population of any industry is populated mostly by the lame, the halt, and the blind. And avoiding those in favor of the serially successful is probably more important than anything else that you can do. Buffett famously says, millions of people in the world can play basketball, but if you want to win some games, you got to have a 7-footer. And it's important to understand that there's a whole bunch of people in Canada who can tell lies about a drill hole. But there are very, very few people who have been serially successful in exploration or serially successful in creating companies. Well, it's much more fun to find the unheralded speculator and ride him or her to victory. It's also, the probability of doing that is almost statistically insignificant.
Fair enough. It's interesting that you summarize it that way. I've written recently about the people thing, my version of Doug's P's, right? The people is absolutely the first P. I've talked about flavor of the day, and I've talked about chasing momentum. So I guess as my mentor, I can say that I've studied what you've said. I try to practice what you and now I preach. And I encourage my viewers and your audience as well to take this all to heart. I think you're basically giving us the keys to success here. Thank you very much.
That and patience, and thank you. You've been a lot of fun to visit with over the years.
Have a good one, Rick.
Thank you.